Where is your money going? Are you aware of what is happening? They are slowly pulling the money in your pocket toward their own fronts. They don't say, "We want your money." They don't say, "Give us your money." The system is built on such a foundation that you feel secure with the money you earn by working and save. But in the meantime, someone is silently growing their wealth. You follow headlines in newspapers, social media analyses about inflation, interest rates, stock market fluctuations, comments like, "This stock will hit the limit," or "This stock will fall." But you never hear or see anywhere who is actually transferring wealth. Don't think this is random. This is a constructed, designed, silent action. Let's look back over the past decades, far back. We have experienced similar things in every major turning point of world history. Money changed hands, assets changed hands, power changed hands, and those who realized this late became the biggest losers. Why are middle-class citizens getting poorer while stock markets rise? Why is it becoming harder to own a home while house and real estate prices increase? Why is your purchasing power falling while wages rise? The problem here is not prices. It's the direction. Money is leaving some people's pockets and going into others. At this point, if you are going against the flow, no matter how hard you try, no matter how much you paddle, you cannot withstand the current. You get tired, but you cannot move forward and reach the calm shore. The question that needs to be asked is important at this point. From whom is the current wealth being taken, into whose vault is it flowing, and where are you in this picture at that moment? If you don't understand this, the next 5 or 10 years will no longer be just an economic cycle for you. This could be a permanent loss of position for you. Because the wealth transfer didn't start as you think or as the headlines show. It had already started long, long ago. If you try to read the economic picture you experience today through the events and people you see, hear, and watch one by one, you will see that you understand nothing. Because what needs to be seen is not the interest rate increase, inflation increase, or movements in the stock market. What needs to be seen is who controls the money and who or which groups change the direction of money during crisis periods. Look back a bit. Remember the Great Depression of 1929, Great Depression. Remember 1971, Nixon shock, collapse of Bretton Woods. Remember Black Monday 1987, Black Monday, stock market crash, first major test of program trading. Remember the Asian financial crisis of 1997, Asian financial crisis, speculative attacks and capital outflows. Remember the dot-com bubble of 2000, dot-com bubble, overvaluation and crash of tech stocks. Remember the 2008 crisis, global financial crisis. Remember the European debt crisis of 2010, European debt crisis, restructuring of government debts. Remember how money was pumped into the markets during the COVID years and how the stock market inflated like a bubble. And don't forget the inflationary wave of 2021 to 2023, inflationary wave, effects of post-pandemic money printing. In these breaking points you experienced, the system did not collapse. The system redistributed. When money is printed and pushed into the market, knowing it will raise inflation, not everyone gets rich. Asset owners get richer, those waiting in cash lose. Inflation is the high cost of living for lower and middle-class people. For the wealthy class, it is the erosion of debt. An interest rate hike is a cost shock for small businesses. For large funds, it is an opportunity to gather cheap assets. When a crisis hits, you see giant companies buying back shares while headlines read, "Market is bleeding." Why? Because a crisis is like a discount season for those with cash. They don't miss this opportunity. Remember the COVID pandemic period. While local shopkeepers closed their shops, tech giants reached historic valuations. Housing prices rose beyond reach. But people looking to buy their first home suddenly found themselves excluded from the system. Wages rose, but real purchasing power fell. This is not a contradiction. This is a mechanism, and it has always worked this way throughout history. When the money supply expands, money first goes to financial assets. Then it inflates asset prices. Then it finally reaches the wage-earning class. By the time it reaches them, prices have already soared and reached unattainable levels. This is exactly where wealth transfer happens. Those who get the money first win. Those who get it last pay the price. And they are paying. Look at central bank balance sheets, you will see they are growing. But government debts are at record levels, Global funds are announcing record profits. Yet the middle class's savings rate is falling. Is this a coincidence? No, the system is not collapsing. The system is repositioning, and in every period of repositioning, power flows toward those closest to information and assets. If you only look at prices, it means you are missing the big picture. Don't forget to look at the flow. Wealth transfer doesn't happen overnight, in one day. It happens slowly, silently. Then it becomes normalized, and by the time you say, "We're used to it," it is complete. Here's what we need to know. The first leg of wealth transfer is not economics. It is psychology. Why? The system is structured so that perception is managed first, not money. You can see this in your surroundings. And maybe this is you. I mean, yourself. The small investor behaves bravely at the peak and cowardly at the bottom. Whereas big money is calm at the bottom and cautious at the peak. And in this situation, you see headlines in the media like, "Markets are booming, a new era begins." A feeling that everyone is winning is created here. An atmosphere is created where you fear missing out, FOMO. This is where the real bomb is dropped. Smart money holders silently distribute, and then the decline begins. Words like crisis, collapse, uncertainty peak in headlines and rumors, and panic selling begins. While the cowardly small investor sells at a loss, players with strong balance sheets start accumulating. This is a spiral. The mathematics in human nature has started to work. While some are fleeing, others fill the empty spaces. Ordinary people feel safe when prices rise. They perceive a threat when they fall. But the asset we call wealth reveals itself in reverse psychology. If any stock or commodity starts being discussed in headlines or rumors among people, on Instagram, X platform, and/or other channels, know that you are too late. Because prices have already been formed beforehand. And if, with the perception created in your environment, they say, "This price won't fall anymore," do not overlook that the risk is growing. Wealth is about to change hands. If you are patient and manage to stay in cash by preserving your liquidity, you will take your place among the winners. If you get carried away by delusion, cannot control your excitement, and change your position, you will lose. The system is designed to push you toward impoverishment. Money must come out of some people's pockets so that others can win. But here, those who are impatient are punished. Those who act consciously receive their rewards. In fact, the losses you experience are not about balance sheets or the analyses you make. This aligns with your behavioral character. In short, if your mindset doesn't change, you are doomed to lose in every era. The result will not change. Technological developments and global conflicts whose causes are not seen as very realistic will create a non-classical economic cycle in the next 10 years. In this period, you will either be tossed around or hold your position firm. Looking at the debt stocks of states, we will no longer live in an era of low interest, abundant money, and unlimited liquidity irresponsibly printed and pushed into the market. It's not just states that are in debt, it is seen that corporate and individual debts have also risen excessively. The system may be fragile, but it has to survive. In such times, we are likely to see the following. As the cost of money rises, inefficient structures fall out of the system. In this period, even if your wages increase, your share of prosperity will not increase. Your wealth cannot be preserved with the money you set aside for savings. Working hard will not be a solution either. You are faced with the realization that inflation is no longer a temporary wave. Even if you see asset prices fall, you will likely see that real assets preserve their value in the long term. If the cash you hold isn't producing anything, it will continue to erode. This is where the middle class's test will begin. Spending habits, debt management, risk perception, and patience capacity will matter. Those who can maintain cash flow during crisis periods, control their debt, and act planned instead of panicking change leagues. Those who try to get by day without seeing the mathematics here stagnate or move down to a lower league. In this ruthless environment, the most pitiful are those who fall into the complacency that the system will recover somehow. Yes, the system will somehow recover, but not everyone can stay in the same place. Therefore, it's not about what the system will do, but what position you are in. Look carefully, observe well, the wealth transfer is not over, it is increasing its pace. What is described here is not a doom scenario. It is only to create awareness. As seen before, Wealth transfers have not happened in a day or overnight. Wealth transfer develops and spreads silently over years. If your standard of living is stagnating while markets are breaking records, it's time to ask yourself this question. Yes. Where am I in the system? While wealth accumulates silently, crisis periods are noisy. In the coming years, geopolitical risks, high levels of debt, persistent inflationary pressure, and technological transformations may make economies more fragile. Don't be afraid of these. But the danger can be great for those who are unconscious. While money is changing direction, set aside your old reflexes. They won't make you money. Don't fall into the worry that the system is collapsing. As always, the system is in motion to find its new position. While lifting some up, it will pull others down. This is not a conspiracy, it is the normal flow of the economic process. When uncertainty increases, staying in cash becomes very important. Ask yourself this question, not, which asset will appreciate more, but, where am I right now? What position am I in? Remember, you will see that investment success is not a matter of luck, but a matter of knowledge, patience, consistency, and strategy, and you will experience that your conscious decisions will create wealth. Try to protect your capital with the inferences you draw from what has been said, reduce your mistakes, and don't forget this. Strategies can win, but what makes the difference is calm behavior, patience, and risk management.